All right, guys, I want to touch on trading with ICT kind of as your main lens or framework versus kind of forming something around profiling and auction market theory and stuff like that. So by no means am I an expert ICT trader or anything like that. But things like fair value gaps, order blocks, liquidity sweeps, things like that. The issue with them is that they don't give you any read on what the actual market condition is. Oftentimes people will ask me, or I'll see in chats and whatnot, that you know is that an order block or did you mark a fair value gap or things like that? And at the end of the day, those things like they're just inefficiencies or nuanced things in the market, right? So like a fair value gap is just like a buying imbalance or a selling imbalance. So it just means there's an indifference between buyers and sellers at that area. So the market come back to rebalance that gap. It's not enough to form a trade off of it alone. It's extremely hard to identify what market condition actually is or when that condition changes, things like that, which you need to be able to do to understand kind of what your bias and hypos are throughout that day or session. It's very hard to form a repeatable process based off of just marking highs and lows, looking at imbalances or fair value gaps and just trading the gap, especially with marking equilibriums and stuff like that. It's not enough to get a read on what the actual market condition is. So by no means, like I said, I'm not an expert ICT trader. I've never traded it. Um, but anyways, let's say that, for example, if we looked at this Bitcoin chart, we have, I think it's now an 11-day composite. So an 11-day profile. I have a fixed range profile over that area, and then the gray box is TPO. So this is the time value area high. They're both the same, but nonetheless, we have an 11-day profile here. So let's just kind of go back from. Let's look at some examples. Again, if there's some hardcore ICT traders watching this, maybe this will bother you and I'll mess something up. I have no idea. Uh, anyways, when the market is rotational inside of value, it's pretty simple. So value area high is resistance and value area low is support, unless of course you find acceptance above a level, right? But that's totally different at that point. That would be a condition change. But ultimately, you're looking for shorts up here, or probably should be, because again, value area high resistance, value area low support. And you're going to expect this kind of condition to stay the same until you see a break from balance or from value. So I'd say if you're trading ICT, for example, again, let's say you're marking swing structure again, whether it's higher time frame, lower time frame. Again, I'm just looking at a larger range we've had through about 2 weeks now. Now let's say you were looking at swing structure basically from this point here. So let's say that let's look from here. So again, we'll look at swing structure. So this would be your swing high, your swing low, your swing high here, and then we break from value, right? And then that's a break of structure. So based on market structure here that we're looking at, that would be bearish based on swings. So that doesn't give you a read on market condition though. So the biggest issue with that is that let's say that you are now looking for shorts into this fair value gap. So this is hard to see. Let me just move this out of the way. Right into this fair value gap, right? We broke structure, so you had broke structure to the downside. You wanted a retracement to catch the trend lower. Let's say you wanted to get short around here, right? To then trade lower. There's a couple problems with that. So just based off of composite structure alone, even disregarding VWAP, we have a older 2-week composite here. So let's just kind of go over a couple things. Don't need to get too in depth. I know my chart's a mess. Just disregard all the levels right now. This is a 2-week profile, right? Here's value area high. Here's the POC. Here's value area low. So it was a rejection, right? It was a larger rounded retest or rejection at this level off of the 2-week value area high, right? So following that rejection, go back to lower time frame again. We started to form kind of a local range here. So following that move, we formed this local range. So again, it's just rotational, built up value here for, I don't know, half a day or so, whatever that happened to be. And then price, breaks from that local balance. So again, we talk about a break from this level. So this is value area low. So again, support inside of value. It's now resistance outside of value, right? Unless you see acceptance back inside, which is what we saw. So we got a rejection of an older composite or I guess composite level. We formed a local composite or local balance here, right? So again, this is resistance, this is support, resistance, support. And then we break from the local balance. So that would be a bullish shift. against local balance, and we traded back inside of the more significant 11-day profile, right? So again, rejection off of older composite, local balance, break from balance, bullish, acceptance back inside of 11-day composite, bullish. So again, if you apply, there's lots of kind of there's kind of a framework you can apply with looking at auction market theory and stuff like that. But um, when price trades back inside of value, or you see acceptance, so let's say we see this where we traded up with high momentum here, we didn't get a retest, but we traded back inside, based off of kind of the 80% rule. You expect it to trade to the other side of value. So if you trade inside and value area low is now support, right? Value area high should be resistance, and that's going to be your likely target, or at least towards the POC. So again, if we look back at, if you were to take a short here and we break structure to the downside, you're looking for a short somewhere in this fair value gap or imbalance. So let's say maybe even pull the fib and you have like a equilibrium or something. I don't know. There's your equilibrium, right? That didn't work, right? That's at the edge of value. That didn't work. We had a high pickup, high relative volume, where we traded higher, or even like your golden pocket kind of fib level, the 618. That didn't do anything either. It traded straight through it. So that's an issue, right? And then from there, value area high is resistance overlapping with VWAP levels, which I can also kind of go over. A couple quick examples of that. So again, the condition just changed. So the condition went from bearish because we broke from balance. We put in a bottom here at an older retest of the, at a retest of the older composite. We formed local balance here, right? We shifted bullish against that. And at the same time, we traded back inside of the 11-day composite, which points to the move through value, right? Again, same thing. So being that we capped here and we traded inside here, so this is now support, this is now resistance because we're inside of value, you expect it to move back down to value area low again, likely, right? If we remain rotational, this will hold this support again, right? Or the volume value area low is a little bit higher, but nonetheless. So again, same thing. If you were to take a trade in this fair value gap because we broke structure again, right? So let's say again, swing structure, there's your low, there's your high, there's your low. We broke this high, so that's now the swing high. You want it, longer retracement to go higher, right? Because we broke structure to the upside. The problem is that we're rotational here, so being that we capped here, you expect it to go to at least here, and we actually traded much lower. But ultimately, you expect it to go to value area low, which it did. So you're buying in the middle of value. This is not really a trade location majority of the time. It's in the middle of the auction. You want to trade at the edges. So again, if you were to pull a fib here or something, I think equilibrium is a common thing in the ICT world, right? It actually produced a little bounce, but ultimately it didn't trade higher at all. It trended for about an hour and a half, right? And then rolled over and died. So not going to provide a trade location because the condition is rotational, which means it points to here. So it gives you no read on what the market condition is, right? And this can be applied over multiple different profiles, shorter duration, longer duration, developing VWAPs, weekly through yearly, prior period VWAPs, weekly through yearly, right? Same thing here. If you were to take a short here, right, you see equal highs here and a fair value gap, right? This is how you'd probably see this if you're trading kind of ICT, I think. And even the POC wasn't here at this point, by the way. So the POC migrated up here because of this price action yesterday. It used to be lower, so that wasn't even there. You couldn't even kind of argue that if you were looking at a profile perspective. But ultimately, if you took a short here, that wouldn't work because we saw acceptance, so we expect it to go to here. So again, acceptance inside of value, we expect it to run to the other side. So that's a couple flaws there. Even disregarding trying to get short around here, right? Let's just break this down again. If you were to try and get short on that retracement because we broke structure to the downside around 80.5K in Bitcoin, that's going to be a problem because if we look at VWAP, again, it's the same thing. It's another issue. So if we look at, this is weekly value. So this box here, this static box, is previous week value. So again, you can apply that kind of AMT logic to this, as well as the developing week, which is the one that's obviously developing and moving. So the issue is that this is previous week value. This is developing week value. So if you tried to get short up here at 80.5K, not only did we trade back inside of that 11-day profile, that 11-day composite, right, which points up, we're now back inside of the developing week, right there. We traded back inside of it, and we're now back inside of the previous week, right? So this is just an example where they both basically overlap. They both point to much higher, right? They both point to value area high. So the same 80% rule applies to this. So here's previous week value high, and here's developing week value area high, right? And that's where we capped ultimately. We deviated it, we traded back inside. We remained rotational in developing week and previous week, right? And again, it also points down to that same level, which was here. It also points to here, 80, basically 80K, right? 80K right there. So if we're rotational in this value as well, you'd see basically the same thing. And ultimately we traded lower. So if you were to try and take a long around here, that's also an issue because again, it's in the middle of the auction. So if you tried to long this bullish fair value gap right here, right, that's not the edge of value. The edge of value is down here. Conversely, the edge of previous week and developing week value and VWAP, given we're rotational, is also lower. So that point's lower as well. So that's an issue. And now that we're outside of value, right, this is now resistance, right? This was resistance outside of value. We now traded inside. It's now support. And we capped upside, so now we expect it to be rotational. This is resistance. Obviously, we flushed lower, right? It was supposed to be support. We traded through it. Now the condition has changed, right? So now I know the condition is now bearish against these levels. This should act as resistance, right? So again, that's why I recommend that, trading, basing your whole concept or your whole strategy or your whole framework off of inefficiencies in the market. It's just simply not enough to have a repeatable process over time, right? You can't get a read on what the market condition is. When you can use kind of a AMT framework to look at, composite structure, larger composites, smaller composites, shorter term VWAPs, longer term VWAPs, both developing and prior, right? So we have developing week, prior week, we have yearly, we have 2025 value, 2024 value, we have developing quarter, we have previous quarter, we have developing month, right? So again, we're rotational in developing month. That's where we put in that low and then we traded higher. And then that was that impulsive move up is seen right here. So we're rotational in monthly value. So right now, we're sort of still chopping on that level. So if we break down from monthly value and we truly trade lower, that means we're going down. Same with quarterly value, right? This points to lower as well. So just a really good example of going over all of that stuff. Cheers, guys.